Welcome to this. In this video, I'll be teaching you some basic stuff that you have to understand when it comes to trade management or risk management. Okay, for you to understand, let's take 10K account for example. When you're risking 1% of 10K account, it is going to be equal to $100. That means you are risking $100 whenever trade go against you. 1%, you are risking 1%. When a trade goes against you, you are losing $100. But have you noticed most of the time when you enter trade, the trade normally hit your stop loss and you lose more than $100. Here's the reason. Let's take 10 pip stop loss, for example. Where you can calculate this, you have to come to my FS book to make sure that you calculate every pair and everything before you enter trade or before you choose your lot size to use. The mistake is coming from the lot size. Every pair has its own pip value. Let's take GBP USD for instance. And let's take it that you are using standard lot size, which is 1.00. And the pip, 10 pip. When a trade go against you, you are going to lose $100. This is over here. And this calculator is giving us a pip value. This is a pip value of this pair, currency pair right here. Every pair that contains USD, when you risk 10 pip stop loss and you use standard lot size, when you hit your stop loss, you are going to lose $100. But when a pair doesn't have USD inside, you are going to lose more than that. This is because the account that you're having, it is being given to you in USD, or maybe you've deposited an amount of $50 or any amount in USD into your broker. The broker is going to give you USD account. So any pair that you are trading which is not in USD, they are going to convert that. Any profit that you make or any losses that you make, they are going to convert it back to USD. So let's look at different pair. NZD CAD. Let's calculate this thing right here. Look at the pip value over here. This is it over here. The pip value of NZD CAD by using standard lot and risking 10 pips, it is going to give you $75. It is going to give you $75. So maybe you are trying to risk 1% of your account, which is 10K account. You are going to use 1%, which is $100. So you are not risking that amount. You are risking what? You are risking $75 right here. This is the pip value. You are risking $75. That means when it hits your profit target, you are not going to do what? You are not going to get the full what? The full amount that you are planning that you're having, especially when it is 20 pip and you are making $200. You are not going to get $200 at the end of the day. So you have to make sure you calculate this very well before you enter any trade with any lot size. Let's take another pair, for example. GBP CAD. Look at the GBP CAD. GBP CAD is also giving the same value, the same pip value right here. GBP CAD is giving the same pip value right here. Let's take Euro USD. Euro USD is giving $100 over here because we are having USD inside. Let me take different pair for example. Euro GBP. This pair is very big when it comes to pip value, but people don't understand. People think this pair can move the whole day, but it is just 20-30 pip. But the pip value over here is very huge. It's a big pair. Look at what you are risking. You are risking this amount of your money. $126. This is the amount that you are risking on your prop firm account or on your personal account. You are not actually risking that 1%, but you are risking 1.2% on it. When you didn't calculate this, you are going to risk that. So for you to do the adjustment, you just have to do like this. Clean the lot size that you're supposed to use, 0.80. You calculate. Look at this. You have to calculate it and see the lot size that you are going to use. That means you know where you are supposed to place your stop loss. Let's take it that you are using 10 pip stop loss. So you have to adjust this lot size to fit in this, to fit with these pips and give you the same percentage that you want to risk on your account. So you have to follow that very well. You have to twist this trade loss size, the trade size, which is a loss size, to fit the stop loss that you are planning to use, or the stop loss that you've calculated on TradingView, which is 10 pips. You have to make sure that what you change this to fit with this and give it 1% that you want to risk on your account. Let's take this one for example, 0.79. Look at this, it is giving $100. So this is the lot size to be used on Euro GBP, not a standard lot size. If you use a standard lot size, which is this 1.00, you're going to lose big amount of money. So you have to make sure you calculate all these things well before you do what. Let's go to GBP card. Assuming you are trading this, that the P value is down, you are going to use more of this 1.30. Let's use this one 97. Then you change it 35, 34. Then you know that what this is a loss size that I'm supposed to use on 10 pip stop loss, so that I can be able to risk exactly $100 on your prop firm challenge or your personal account. So I hope you guys learn something from this. You have to make sure you check these things very well before entering any trade. If not, you are going to lose money. You are going to contact the support team of your prop firm. They are not going to mind you and those kind of stuff, because they expect you to calculate all these things before coming to them, that you know how to trade. You are coming to trade. These are the basic things that you have to know to calculate your risk. Without these, you're going to be doing different things in the market. So guys, thank you guys for watching. Please subscribe, like this video, comment, and ask any question that you want to ask. I'm ready to answer you. Thank you. Bless.